All right, Mr. Nandakumar is also joining us now, the MD and CEO at Manappuram Finance, to discuss some of the trends when it comes to the gold loan portfolio. Mr. Nandakumar, thanks for joining us. Let's talk a little bit about the kind of AUM growth that you've seen as well, and how that's been evolving over the last few months. If you could give us just an insight into the current trend.
The gold price has gone down. The gold price has gone down by around 15% from more than that. The tonnage remaining stagnant. What happened during the last 9 months to the collateral, the tonnage has gone down by 5.5%, whereas the portfolio grew by 19%. And now the reverse is happening. The portfolio, the underlying tonnage, collateral, that is steady. There is no degrowth, but there is some degrowth as far as portfolio is concerned. So this is because of the reason of lower LTV now, lower loan amount from the LTV in amount volume terms. So the percentage remains the same. The amount goes down because of the gold price has gone down by 15%. That impact is there. So last quarter we may actually degrow by around 4-5%. Still, we are confident of maintaining our projected 15% growth in AUM during the year. The other businesses, we have started in full swing, and it is going like the pre-COVID days. The disbursals in vehicle finance or affordable housing or MSME or microfinance, all the disbursals are back to normal.
Okay. What about, you've talked a little bit, I guess, about how you're also re-strategizing given, given what we're seeing on the LTV with prices falling. What about the competition from banks? How are you analyzing the current scenario? Do you also see pressure in that sense?
So banks were allowed to offer up to 90% up to the end of this year for certain categories of gold loan borrowers. That is the PSL sector. Now that period is going to be over because it will end towards the end of this month. So it is not a big concern. The concern must be for lenders who have lent up to 90%. Because now the gold price is down by around 15%. So in that situation, lending up to 90% at the peak of the value of gold, a portion of the portfolio would be underwater. So that was risky for the lenders who have lent up to 90%. So we have lent, our cap was 75%, and average LTV remained below 65%. So we don't have that problem now. So that advantage once some lenders had has turned out to be disadvantage to them now.
Okay. Good morning then, Mr. Nandakumar. Just to give us an outlook as to what the sense is when it comes to your margins. Is there pricing power then for players like yours?
So we are able to maintain our margin, and we are able to slightly improve also because when the volume grew, our OPEX to AUM has come down. So because of that, the margin has slightly improved. So even with whatever pressure in the market, we are hopeful that we will be able to maintain that level of need.
Okay. And how is your overall credit recovery shaping up? What kind of trends are you foreseeing on the asset quality?
Over 70% of our portfolio at the consolidated level is gold loan, where there is no credit risk at all. So the other portfolios like microfinance, we see the credit cost to be settling around 7-8%. So we are providing that, we have been providing that, anticipating this on the very beginning. So it is going as we have budgeted, we have planned in the beginning of the lockdown, during the beginning of this year. In other businesses like commercial vehicle, what we have reported is a 6% NPA during the last quarter. It is improving because the buses have started flying, school buses, etc., the passenger buses, etc. So the recoveries have started coming, so it is improving. Similarly, in affordable housing, we reported an NPA of 4%. Now things are improving only, so things are getting better now. So our restructured portfolio is very low, much below 20%. In the CV as well as affordable housing, but the collections there are 100%.
Okay. You've already guided for double-digit growth in FY22, Mr. Nandakumar. Given what we've spoken about today and how demand growth is shaping up, what would be your guidance now when you're looking ahead?
So we have been always projecting a targeted growth of around 15-20% every year and ROE of 20%. So that is always maintained. That is our plan. Accordingly, only we prepare the budget and we used to achieve our value.